Hello, my name is Aaron Edwards, co-founder and market consultant of Santos Springs. We offer grain marketing solutions to producers in multiple countries. Welcome to our W2H grain marketing channel. Go ahead and hit the subscribe button. I also recommend tapping the bell so you get future notifications. And if you like what you see, hit the like and share this video with other farmers who care deeply about their grain marketing. If you are a corn or soybean farmer, your revenue depends not only on your production, but also the answer to three simple questions: when, how much, and how you sell. One W, when, two H's, how and how much. Our W2H mentorship provides a clear, concise, and custom approach to answering each one of these three questions for your specific farm throughout the year. Before we start this week's content, it's always important to remember that trading in futures products entails significant risk of loss, which must be understood prior to trading and may not be appropriate for all investors. This commentary and the information contained within should be considered market commentary and reflect the opinions of the author. For those of you watching this with a delay, if you are a U.S. corn or soybean farmer and want to stop being held hostage by market uncertainty, let us teach you how to place each one of your bushels in a grain marketing strategy specifically designed to optimize your farm's revenue. Click on the link and we'll work together to see if our W2H mentorship is the right next step for your grain marketing. Today is December 16th, 2025. My name is Aaron Edwards with Santos Springs, and let's go get started on this week's analysis and recommendations. I'm going to share my screen here. The first thing we want to do, it's always that call to action, that bias, and let me grab a marker here. We're going to go with, there we go, yellow. No action recommended. And this is a little bit tough because we're running out of calendar and we've still got quarter 4 corn to move. So if you've been tracking along and looking at that quarter 4 corn, well, clock's ticking. We only have 2 weeks left. I'm going to walk you through the thought process as to why no action is recommended this week, and then we'll go from there because we do still have to get some work done. But first, we always want to kind of remember our philosophy behind what we do. The base of what we do is a market plan portfolio. We lay out a strategy. Let's make sure that we're watching the market in the way that meets the needs of your farm. Then there's the middle of that pyramid, which is seasonals, funds, technicals. That's kind of the market analysis part, which lines up with the plan, the portfolio, the strategy on farm. And when we build those in that sequence, we get our action. That makes sense. And so for this week, no action recommended. That's not to say there aren't headlines and things happening in markets. We've seen soybeans just continue to slide, but we've gotten our quarter 4 work and even our quarter 1 work done on soybeans. So, I mean, we never like to see markets going down, but it's not a pressing issue as we've made sales. And then as we look at our corn, we've not really had any very good opportunities. And so I'll walk through the corn first, and then we can talk a little bit about soybeans. As we look at the corn, the first thing I wanted to point out is just we're gradually getting more and more updated positions on the funds. So we now have updates. It's kind of hard to see it, but these last 4 numbers are our November numbers. So I'll see if we can zoom in on that. So we got, see if it's going to cooperate. Those are November numbers. So we're not quite up to date. December 16th, we don't have a report as of, let's see, that would have been December probably 12th. So we're missing a couple of December reports. But man, we're getting pretty close after the government shut down 42 days without reports. Now we have information through the end of November. What's interesting, and we're going to look at it technically in just a minute, but as we look at speculators, this is if you look at the last week of November, then the second to the last week of November, they got long
They completely erased their net sold position. They actually got long and they got short again. So they're just teetering. Should I buy or should I sell corn? That's as of the end of November. Now let's look at what happened to pricing during that end of November. And we could see as we look at the end of November, let's see if we get a good color, maybe black here. As we look at the month of November, that last 2 weeks of November, that was right in here. It's kind of that question, should I buy or should I sell corn? Those speculators, they were as middle to the road, you know, just this line here is the 20-day moving average, and this is the 200-day moving average. They're trading right between those two levels. Is this a market that's going to fail, or is this a market that's going to rally? And as we look at it now, even now, there's a bullish and a bearish story. So I'll do the bad news first. We do have these lows back from down here, close to $4. And we did fail here at the 200-day moving average. So maybe this 20 days coming down. And if it really does come down, we could have a sell-off of another 40 cents down to basically what was the harvest lows so far. So that is a possibility. If we're feeling a little bit gloomy, that's definitely something that could happen. The way I like to think about it, and what I actually think makes more sense, is if this was a true harvest low, typically we don't go back and revisit harvest lows until we have a reason to go back and revisit it. And then if we think about it, the market kind of stair-stepping up. We get our first move up, and then we get kind of our second move up. So far, it looks to me like this is more of a market just making sure that it doesn't find willing sellers at lower prices. We tested, I'll even change the color here. If we go back and, we tested that point right there, and then we tested it again, and we haven't gone back there since. And then now we tested that point right there, and then we're testing it again, and maybe this doesn't hold, but I kind of think this is just a market that's struggling to move higher, but it is stair-stepping higher. I think we're going to run out of selling pressure down in here. I don't think anybody's too excited about it. And here's my thought process as we look at the recommendations this week. Let's say that this market drops 40 cents. Let's say it comes down here and it drops 40 cents. Not hoping that happens. But we're already seeing basis improve. So if it drops 40 cents, I'm guessing, depending on where you are, the basis would improve 10, 15, 20 cents. If we were to get kind of the bottom out of this market, well, if that's the case, basis improves 20 cents, markets go down, that's where very likely we would look at a basis contract, right? We'll we'll make that call when we get there. But if it goes down, which isn't what we're hoping for, then there's no need to panic and do something now. We might get better basis. And if basis just simply stays firm across most of the Corn Belt, the corn basis has been climbing. In the Eastern Corn Belt, we are already seeing basis levels for corn ahead of historic averages. In the Western Corn Belt, they're still lagging historic averages. But across the board, they're pretty much climbing. To the extent that corn basis continues to climb, yawn, wait for it. It'll improve. There's no need to be in a hurry. Just let that clip our way. And then let's say basis goes up. A nickel and futures bounce back up to this price here over the next 2 weeks. You might be 15 cents better on a flat cash price sale. So why panic today? And I know we're kind of, next week's Christmas, and then we're coming into New Year's and all that stuff. But my thought is, I think this corn market will likely bounce. And what we hope for is that it takes another stair step, just an incremental stair step. All right, we found that. Now the new floor is up here, maybe closer to 450. And then once we get up over that, if we could get up over the 200-day moving average, that's where sometimes we get those rallies. I'm not really thinking of a Santa Claus rally anymore because we've not really, we're too close to Christmas to get that fun December rally ahead of schedule, so to speak. But I'm not pessimistic corn at all. Export numbers are strong. Domestic usage numbers are strong. I just think corn is going to likely move sideways to higher is going to be the dominant trend. So as we have to make sales, we'll make sales. But being a reluctant patient seller is not. It's a very calculated risk, in my opinion. There's not reason for panic, so to speak. Shifting gears now to the soybeans, there we got a real dramatic story when it comes to the funds. When we got the funds position updated, let's grab that in blue. So once we get up over about this 100,000 contracts mark, that's where we start getting real excited, right? Where we say, hey, maybe these funds have overdone it. Maybe there's some speculation there that could be friendly. That was the first time we actually got a speculative outlook on soybeans. Have to go back and look, but I think 18 months since we've had spec funds at similar levels where they're overbought, so to speak, and giving us some opportunities. So we suspected, we didn't know the exact levels, we suspected this was the case, that we had significant speculative buying in the soybean market, and that's what was driving prices higher. The thing about speculative buying is it doesn't necessarily, there's not necessarily a demand story. There may or may not be a demand story, but all we know is speculators got excited about owning soybeans. It's 2 weeks delayed. I expect that as we get the December reports, we will start seeing speculators stepping out of that long position. As long as they got, the net long position being so big, it will likely take a few weeks for them to step back. But as we look at what's happened in the pricing market, if you kind of picture that chart, we started getting a little bit of speculative buying in here, just a little bit. Then more here, more here, more here. And then the last week in November, they actually backed off. So you can almost, if we were to, I'll actually go back and do that because I think it's an interesting look. If we were to think of weekly charts, right? October, up. Cancel that. October. Last week of October. So it goes up 1 week, up one more week, up a third week, down the fourth week. So let's draw that roughly here as we look at this chart. Let's get that in black. So we have the last week of October, then up 1 week, up another week, up a third week, down a fourth week. It looks like we're going to be down a fifth week, down a sixth week, and then what's going to happen, right? It looks like speculators have come out. For some time, I've mentioned this gap. The big news there is we filled the gap. The other thing that I've mentioned for some time is this 200-day moving average. And we are getting really, really close to that. We're within about a nickel of it. We're getting real close to that 200-day moving average. If this support holds, we come down to the 200-day moving average and it holds. And if speculators don't decide that they want to go short, I'm going to see that as very, very good news. And this is why. During the entire year of 2025, the best prices were basically in that range. Somewhere around 1090 was the flat out best that you could do. If you sold the tippy top of the market, that's the best that you could do. If this becomes support, this 200-day moving average becomes support, and that's a big if, but look at how that's good news. About a dime under the highs from last year becomes our new support line, the new floor. So basically the 2025 ceiling until November we blew out of that, would become maybe the 2026 floor. That's fantastic news. So this sell-off, we never like to see a sell-off in grain prices. I'm not particularly disappointed with this sell-off in soybeans because we just had to find our footing. And if this is our footing, then that's good news. I just don't want to celebrate too early because speculators, they can exaggerate trends. And I would hate to see it, but it's not impossible that they come down here and they say, well, we try to figure out how high we could go. Now let's figure out how low we can go. Now let's really punish this market down and let's see if we can go get this market under $10. And that could happen, but I'm going to stop sharing the screen and I'll go over a couple of caveats as to why I don't really expect that to happen. All right. Reason number one, the corn market seems steady. So beans coming down, but if the corn market, unless the corn market's going to fall, and if they both fall together, that's obviously bad news. If the corn market's stable and the bean market found flooring, and they can both climb sideways to higher and have stronger prices positioning us into the winter and into the spring, that's just good news. That's across the board good news. So the first thing that makes me think that soybeans might find their footing, number one, is the corn market. Number two is the old adage, low prices cure low prices. We've seen strong crush numbers in the U.S. We've seen demand out of Argentina and out of Brazil, and as prices fell off, their basis gradually came back a little bit. Yeah, there's a monster crop, but we know that. There's a little bit of a weaker dollar, so that could help our exports. There's a lot of stories out there that I think they might at least keep the bears a little bit cautious, and that's all we really need. Just come down to support and not get speculator selling. If we can come down to support and speculators just say, well, I don't want to sell this. That's really all we need. So I'm still holding my breath somewhat. I'm still a little bit concerned with the potential for speculators punishing the soybean market, but let's hope that doesn't happen. Let's hope that they just kind of exit the market graciously, and then we get some other headline that helps us move forward. Now let's look at the let's just get our summary here and wrap it up. So seasonally for corn, it's neither a buy nor a sell. For soybeans, it's a sell. I'm still going to leave the question mark on the managed money because we are still late, but it's been nice to get caught up. Corn is in a downtrend below the 20-day moving average, and soybeans are in a downtrend. They are also below the 20-day moving average. Basis, let's look at some considerations here. Basis levels in the Eastern Corn Belt for soybeans are pretty well tracking with historic averages. Corn basis in the Eastern Corn Belt, on the other hand, is tracking above historic averages in most parts. In the Western Corn Belt, basis has improved for both corn and soybeans, but they are still lagging behind historic basis levels for the most part. The soybean market filled the gap that was left from early November when Trump made his Asia trip. And the soybean market is approaching the support level of the 200-day moving average. If this support holds, that is very good news in my opinion. The corn market has fallen about a dime off of the 200-day moving average, but so far it has not taken out the lows from the previous move down. If this is all that happens, on the downside, we can be somewhat optimistic that the corn stair-step move upward will likely continue. Thank you for watching. I hope you have a great rest of your day, great rest of your week, and we'll touch base next week before Christmas.